And we've got all your presentations loaded, so
Thank you.
yeah.
And they'll be flipping for us this time.
There'll be what?
They'll be flipping on slides for us. So we say next slide.
And I talk about too many different topics, so you guys have to keep track. Oh, you
Hopefully you will forgive me if I get something wrong.
something good or bad?
No, it's just neutral.
Because you're going first. Oh, it's all right. Doesn't matter. No, because we're putting you first, but you're in the middle.
Is this the wrong thing?
It's okay. Start with you and I should go last. เดี๋ยวผมไปแสดง
Okay. Good evening, ladies and gentlemen, and viewers online. I'm Gwen Robinson, former president of the Foreign Correspondents Club of Thailand and editor-at-large of Nikkei Asia. We're here tonight to have a look at the Thai economy and the surrounding region as well. And I'm sorry for the slightly late start. There's some bad weather and bad traffic in Bangkok, which is why some of our members have been delayed. Anyway, we normally make announcements about upcoming events. We've got too many actually coming up, so I'd just like to say do have a look at our website and Facebook. We've got some very good events coming up. I'll just mention one on Thursday night about the rise of Me Too awareness in Thailand, pegged to debate about sexual assault and harassment issues. That promises to be quite a heated and spirited discussion. Anyway, we're going to move to the Thai economy, and I'd just like to introduce our excellent panel tonight. On my far right is Dr. Kirida Balpichit, Director for Economic Intelligence Service at the Thailand Development Research Institute, TDRI. Next to her is Dr. Birgit Hansel, the World Bank Country Manager for Thailand. And closest to me here is Burin Adulwatana, Global Investment Strategist and Managing Director at Kasikorn Private Bank. So I think this is just an excellent lineup of panelists because they span all aspects of the economy. And I think there's lots I could say, but I'll just point out that this is a particularly good week to talk about the economy. We've got the first day of the reading of Thailand's budget bill in Parliament. A lot of controversy about it and political infighting. We've just had a big focus recently on the launch of the APEC summit round this year with some a ministerial last weekend and the launch or announcement of the Indo-Pacific Economic Framework, which is setting some regional context for Thailand's economic debate and many other things. So I think I will turn first to Dr. Birgit of the World Bank to kick off, and I think, Birgit, you're also going to focus a little bit on the regional economy as well as Thailand for context, so over to you.
Thanks so much, Gwen. Thanks for having us, economists, here in the evening over dinner. And I will just start introducing a bit the economic scene in the region and what we see as the global economic impact also hitting East Asia and Pacific, including Thailand. So this is a bit comparing Thailand to the rest of what is happening in the region, and I think Kun Kirida and Kun Burin will take it a bit deeper into the Thai economy before we have questions and answers. So what I would like to start with is what we see happening already since the last quarter of 2021, which is that we do see a recovery gathering steam, and that is primarily, as you can see on the left, led by growth in China. The rest of the region too posted really strong growth in the fourth quarter of 2021, which followed this dip that you see there. The blue line is East Asia and the Pacific, excluding China, which was the Delta COVID shock that hit. But what we see is that is reflected on the right side is that this recovery is quite uneven across the region, right? And output in many countries actually still remained below the pre-pandemic levels. And you can see this in the change of GDP to pre-pandemic levels on the right side. Thailand is somewhere in the middle. I can try, no, I cannot. Somebody else has a pointer, hopefully, and can point to it. But what we see in terms of outlook for this year is that there are really three emerging shocks which might impact that nascent recovery that we saw. Next, please. And here we see actually, next slide, please. And here we see actually three global issues that will impact not just the Thai economy, but the economy in the region. And one is, of course, the most serious one, the Russia-Ukraine war, which is leading already to a spike in commodity prices and strains in financial markets and loss of business confidence. But this comes on top of what we see as a structural slowdown in China that is there impacted especially by the growing COVID infections amid the country's zero COVID policy. And also still continuing difficulties from the over-leveraged real estate sector there. And of course, on the right, you see the impact of the financial tightening in the United States as we see there inflation at really high levels. And these three shocks that we see coming from the global scene will affect the region through the trade and financial channels. But it will depend really on the individual countries, how they will be affected in their exposure to these three shocks. Next, please. So when we unpack it a bit, what will happen in many countries, we see that most East Asia and Pacific countries are not directly exposed to Ukraine or Russia through trade or finance. And they feel really the global repercussions from this shock most immediately and significantly because of the spike in fuel and food prices. And you see here on these two graphs the exposure of the countries in the region to either net exports of ores and mineral fuels or to rice, corn, wheat, and fertilizers. So some countries like Indonesia and Malaysia are obviously less dependent on imported fuels, but most other countries in the regions are energy importers, including, of course, as you see, Thailand for crude oil and gas. Rice prices are also likely to increase. Rice and wheat are substitutes, and as will prices for fertilizers and energy. And this is also going to weigh on rice exporters like Thailand and Vietnam. So while Thailand is in a better position because it is a net rice exporter, the cost of fertilizers will hit Thailand. Unfortunately, the increasing price for fertilizers will hit them quite a bit going forward. Next, please. Moving to what happens in the financial markets, which is mainly driven by the trends of increasing interest rates in the United States due to the inflation pressures there. Here we see that tightening financial conditions will affect most countries that have large external financing needs, including those who hold high external debt levels like Laos, PDR, as you can see here, Mongolia, and countries that rely on short-term capital flows. And here you see Thailand actually included, together with Cambodia and Malaysia, where we have quite a bit of short-term debt that has to be refinanced and will be impacted by higher interest rates once you need to refinance it. Next, please. And then to the slowdown in overall growth that might happen, especially emanating from China, where we see the structural growth slowdown. And here we feel that mostly export-oriented economies like Cambodia, Malaysia, Thailand, and Vietnam, of course, will be hit, where more than half of domestic value added is destined to foreign markets. And you can see here the different markets, market exposures for these countries, and you can see Thailand is pretty much equally exposed, for instance, to China and the United States, where a significant destination of exports is going to. Next. Perhaps in terms of what are the options for governments in this situation where you're trying to support a recovery, but at the same time have these three shocks coming at you down the road. What we observe, of course, is that government support capacity has been stretched already by the pandemic. Many countries, as you know, already have big fiscal stimulus packages launched over the last 2 years. So the scope for a supportive fiscal policy in most countries is quite constrained by debt that has increased by 10 percentage points of GDP on average. And we see that on the left, which is, of course, as you see, also true for Thailand, where we saw quite an increase in the debt levels, and also an increase in the debt ceiling from 60 to 70% as a government policy. On the other hand, we see also for monetary policy more limited space, because as you see on the right, core inflation remains still low, but it is rising. We see that combined with the global financial tightening is beginning to really limit options for support of monetary policy in some countries, and we can discuss a bit more for Thailand what the space for monetary policy is there and what is going to likely impact the pressures on the financial system that is not coming just from inflation. It is also going to come from the phasing out of the forbearance measures. And let me just finish perhaps with what we would advise from the World Bank in this difficult policy space that many governments in the region find themselves. And to really mitigate these risks, it will be important to really make good use of the fiscal policy instruments that a government has and use the resources, the remaining fiscal buffers, very carefully and efficiently. But at the same time also strengthen macroprudential policies. So on the one side, how to use your fiscal space best, it's really about targeted support now, to switch squarely to targeted support, away from rather broad, unselected transfers and price regulations. That would really help deliver gains and creating space also for productivity enhancing investments. And while and at the same time really watching very carefully the financial sectors due to the higher inflation and financial sector tightening globally. While we see that most banks in East Asia and the Pacific countries are generally well capitalized, and you can see the indicators for countries here on the right, there are vulnerabilities that may arise during the next few years that need to be very carefully managed. And as I said, we can discuss that perhaps a bit more in detail also for Thailand. But let me stop here and hand it back to you, Gwen.
Well, thanks very much, Birgit. I think you've set yourself up for a question a bit further down the line in terms of what Thailand is doing with that fiscal space, and particularly with so much focus now on the expansionary budget and how much budget should continue to expand in the context of debt levels, so perhaps I might let you off the hook now and we'll come back to that, but that definitely is I think a big debate point here, as it is through the region. Anyway, I will turn now to Dr. Kirida. Over to you.
Thank you so much, Gwen. Good evening, everyone, both here and online. So, as Birgit has mentioned, that we have seen recovery in many of the countries, but many of the risks still remain. So, what I have planned to speak for the next 10 minutes is how do we see Thailand going forward, either this year or even towards next year. And if I could go on to my first slide, you can see that actually the Thai economy has been recovering. Last year, the Thai economy grew by 1.6%. But this year, I think maybe you want to show the PDF version because I think this version has a lot of jumps in the slide. But anyway, let me just talk through this first.
Oh, there we go.
Well, because last year, the Thai economy grew by 1.6%, and this year we are expecting that the economy will grow by 3%. So a lot of people were asking, what's going on? Why is the Thai economy, growing faster than last year? Well, first of all, it's coming from a low base of last year, right? If you remember, during the second half of last year, there was a shutdown, pretty much, and we just sort of reopened in the last quarter of the year. So this year we have a full year of an opening of our economy. So consumption, tourists, including international tourists, are starting to come back. So if you look at the different components of the domestic demand, you will see definitely a pickup from last year. So it's not surprising that if you could just go back to the first slide, please. So you can see that it's if you can just go back some more. Sorry. Actually, to the slide after my title slide. You can go back. Yep. Okay. Right. So if you just look at the first quarter of this year, we see that growth has been 2.2% year on year, and that has exceeded expectations of most of the investors and most of the analysts. So what has been driving? You can see that almost all components, private consumption, investment from the private sector, even net exports, have been growing this year. So for the whole year of this year, for example, we expect that private consumption, household consumption this year will grow by more than last year. Definitely, tourism will be more. We expect about 5 to 6 million tourists this year, while last year we only had 400,000. Right. So you can see that there will be a jump in the receipts from tourism as well. Private investments have also been growing, and with the COVID situation easing, there are more and more private investments that are coming to Thailand, both from the domestic investors and also from the foreign investors. If you look at the BOI approvals, you can see that many of them have been approved last year, and there's more interest in coming, especially relocating from China as well. And we can talk more about that if you're interested in that, give you more details on that. So geopolitics sometimes play in the favor of Thailand as well. So that's the relocation part from China, which helps our private investments as well. In terms of exports, which is a major driver of economy, because if you remember, in 100% of the Thai economy, 55% is export of goods, right? Another 50% is domestic consumption, and around another 12% is international tourism, and 8% is domestic tourism. So you can see that these are the major drivers of the Thai economy. So in terms of exports of goods, which is 55% of our economy, last year, it was like record high, both in terms of absolute amount in dollar terms and also in growth terms. Last year we had a 17% growth in exports, and the value of exports was like all-time high. This year, of course, from a very high base last year, and with a slowdown in our markets, as Birgit has mentioned, we expect growth of exports to be around maybe 5%, but still it's a 5% growth. It's not a contraction. So overall, we can see that this year, of course, we will see a higher growth of the whole economy compared to last year. But of course, there are risks that we're facing, especially coming from inflation due to the higher cost of commodities, prices of commodities at the moment, coming from the Ukraine-Russian war, which is probably the main factor in that. So if you can see the next slide, please. Oil prices, right, which has a big impact on Thailand because we are a net importer of oil. If you can go on to the next slide, please. You can see that for the first quarter of the year, oil prices was okay. But when the war hit, right, oil prices went up to like 120 and sometimes even $140 per barrel before it's now, it's now softening a bit. So if you look at the oil price this year, for the whole year, the Energy International Agency forecasts that the oil price this year for the whole year should be around $103 per barrel, right? So in the first half of the year, it will be pretty high, but especially in the second quarter, and then it will start softening, but it will not go back to the, the pre-crisis or the pre-COVID level. It will still be over $100. So on average, oil prices this year will still be, over $100. So this has a lot of implications for Thailand because that's, the major cost of our transportation, and that is one of the reasons why our inflation has been quite high for the past several months. If you can go to the next slide, please. Also, with the high oil prices, coupled with the baht depreciation, right? So when we actually pay for oil prices in baht terms, it's quite high because on top of the increase in the global oil prices, the baht depreciation also makes oil prices in baht terms more expensive. And here it's interesting to see that, as the U.S., of course, as the U.S. dollar appreciates with, the different, monetary policy in the U.S., which is quite relaxed right now, increasing of interest, not relaxed, or more tightened right now, meaning increase of interest rates in the U.S., right, or the stop of printing money, which is the quantitative easing. Well, that makes the U.S. dollar more more attractive, and people want to hold U.S. dollars. So that makes the U.S. dollar in the left chart at the bottom appreciate. So of course, when you compare the Thai baht to the US dollar, the Thai baht is weaker. But the more interesting thing is, if you look at the Thai baht compared to other countries, in the region, well, of course, except for Japan, you can see that the Thai baht is almost, the most depreciated in the region. And one of the reasons is because due to the high oil prices, right, we have more money flowing out of the country. So in simple terms, our trade account, right, has been in deficit because even though we do still export, there's still growth in exports, but we also import more as well, especially in terms of oil. And as the prices of oil go up, the value of imports also go up. So with the deficit in our trade account, and that has a direct impact on our exchange rate, which is why our exchange rate is quite depreciated compared to other countries in the region as well. And there's a forecast by many agencies and investment houses that by the end of the year, the baht should probably be around 33.5 baht to the US dollar. So that's the forecast, that most of the investment houses average of their forecast. So again, so expect the baht to be quite depreciated this year. In the next slide, please. So you will see that, as I mentioned, that with the global prices of oil rising, with the baht depreciating, and remember, the government subsidies on diesel has already been reduced. So all in all, the prices of retail or price of oil in Thailand is now going up. And that really factors into our inflation, which is, I think, in the next slide. If you can press the next slide, please. You will see that, our inflation, this is the consumer price index, the blue line, and the orange line is the producer price index. So you can see that both consumers and producers are now facing higher costs. Therefore, their prices have risen. And of course, this comes a lot from oil, from energy, and also from food. So these are the two main items which have caused inflation in Thailand to rise in the past several months. So like in March, our inflation consumer price inflation was around 5.8%, and in April it was like 4.65%. So this is of course in line with the oil prices and the commodity prices as well. So here again you can see that consumer prices have been rising, but the interesting thing in this chart is that the producer prices, right, the costs the producers are bearing, are even higher. They have shot up even more than the producers are bearing. This means that even though producers are facing a higher price, they don't want to pass the prices fully to the consumers for various reasons, right? For they're afraid that they will lose their customers, or or they do not want the customers to to have lower purchasing power. For whatever reasons, we can see that so far producers have not passed the full extent of the cost increase to the consumers. But eventually they will definitely, will start passing on. And we can see in the news now that even like instant noodles, right, prices are rising. So we expect that for the whole year, inflation should still remain around 5% this year, which of course for Thailand it's a phenomenal rate, because we are used to only 1%, right, or a little bit, or even below 1% inflation rate. So this year is going to be 5. Next year, of course, with the high base this year, and oil prices next year and commodity price will probably increase, but not by as much as this year compared to last year. Inflation numbers would probably be less, but again, the price level will remain high, right? So this has implications, especially for the lower income groups, because if you actually look at the consumer basket for lower income households, 40% is food, right? Compared to those of us sitting here, it's 10% for us, right? Food is around 10% of our total spending per month, but for low income households, it's 40%. So when food prices go up this high, it does really affect the lower income group. So if you go to the next slide, please. I just have a few more. Now, turning to the other part, which is interest rates, right? So people say, okay, inflation is rising. So like in the U.S., the Fed has decided to raise interest rates to cope with the high inflation. What about in Thailand? Would the central bank or would the Monetary Policy Committee raise its policy rate? I don't know what Kumburin thinks, but I think they won't. This year, at least, they will not be raising the policy rates. So banks will probably not be raising their lending rates as well. But of course, they would choose only good customers, right? If they are not able to raise interest rates, they will only choose good customers. So again, here, we don't think rates will increase this year, because the central bank, does not think that raising interest rates or policy rate will help in curbing inflation, because inflation in Thailand is from abroad. It's cost push, right? It's not because we have lots of demand like in the U.S., so we need to raise interest rates to put a brake on demand. So here again, we don't think interest rates in Thailand would rise anytime soon. Maybe early next year, maybe. Let's see the recovery of the Thai economy. If demand starts coming back, then only the central bank will start to raise interest rates. So if you go on to the next slide. So this again would probably help households and SMEs with debt as well. So I just want to finish with this and with government reactions to this. So a lot of people are saying that, oh, okay, so if commodity prices are rising, agricultural prices are rising, then Thai farmers, right, should benefit from all of this. So which is why I want to also turn to Thai agriculture sector, which actually shows that palm oil definitely has received a lot of benefit from the rise in the crude oil prices, which again also pushes palm oil, because palm oil is also used to right, as oil for transportation as well. So palm oil definitely has taken a big benefit out of that. But other than that, we see some meat, some cassava prices rising, and this is in the first quarter. And rice prices are yet to rise, but we think it will rise because it's also a substitute of wheat. In broad terms, but again, we haven't seen it. This is the data from quarter one of this year. It hasn't risen. The prices of rice hasn't risen yet, but in the second quarter, it has just started rising. So, and rubber prices have actually declined a bit because there's not so much demand for rubber gloves anymore after COVID has eased. So I'm mentioning these because these are the big agricultural produce in Thailand where many of the Thai agriculture workers work in, especially in rice and rubber. So those are the sectors that probably would see some increase in prices, but not much. But they're also seeing a lot of increase in their costs as well. So if you actually look at their margin or their profits, that it's not much. So what is the government? I'll just end with saying, so what's the government doing? So the government, as Birgit has mentioned, right, has raised its public debt level, public debt ratio to GDP from 60s to 70%. So there's a lot of room for borrowing and for spending. So that's not a constraint. But what the government is doing now, which is a bit surprising to me, given that we might have elections soon, don't quote me on that, but is that they're actually targeting, right? So they're actually not giving money to everyone. They're trying to reduce the across the board subsidy on diesel, right, which benefits everyone, including those driving, BMW and Mercedes as well. But, the government is saying, look, we will have to raise diesel prices. Of course, they could only raise it up to 32 baht, and they had to stop there. But still, it was an increase from the previous price. And we will target, right? We will give some subsidies to motorcycle drivers. We'll give subsidies to those, poor people with welfare cards. So they're sort of turning more towards targeted assistance. But of course, it's a slow move. There's still many programs which are still helping across the board, including, diesel is still subsidized, although less than before, and also agricultural subsidies are still around, right? So that's there. But again, I would say two things. One is that the government has money to spend, and two, they are trying to target, which is a move in a positive direction. But again, there's still a lot of risk coming from the high inflation that we will face, and I think the government will still need to give a lot of assistance to the different groups that are affected, and hopefully they'll do it in a targeted manner. So let me just stop there. Gwen.
Thanks so much, Kirita, for that excellent rundown. Can I just a very quick follow-up, because the budget is just being read now in Parliament, so it's slightly, it's great timing for our panel, but it's possibly just a little bit too early because you don't really know what will come out in the end in the budget. Is it likely to change when you talk about targeting? And also I noticed there's big increases and big decreases in certain sectors, especially spending, for example, some of these massive infrastructure spending projects, etc. Is that likely to change much? Is it hard for you to calculate that right now?
I think it will be, too early to say right now if that will happen. But Kun Burin might have looked at it more deeply. But of course, this year we'll probably spend less on, let's say, healthcare and COVID issues. So there will be money left from that from those spending towards big infrastructure spending, which at TDRI we have done a study on investments in infrastructure, especially transport infrastructure, and they all seem to be on track. They have been delayed from COVID, but it seems that they're picking up this
as
year.
per increased spending, responding to that extra funds and like the raising of the debt ceiling and.
That too, yes, that too, and because the mega projects on transport infrastructure have been delayed for the past 2 years. I think they're trying to catch up on those now, the trains and the motorways.
Right, so we might see a lot more kick through spending on that.
Infrastructure spending, yes.
Well, we'll come back to that, and there's a little challenge for you, Brian, to follow up on that. But anyway, carry on. Over to you. The private sector economist view.
Okay, all right. I'm on the dark side, obviously. So what a difference 2 years make. I remember when I was when invited me 2 years ago, oil prices were negative, and now oil prices were above $120 per barrel, and we're not sure when, where the highest it could get. Last night I heard that the EU tried to ban the import of oil from Russia. I think 3 countries disagree. It's probably going to be a lot harder to win themselves out of gas more than oil. I think oil imports are, I don't know, the sanctions are probably symbolic, but they will try to win themselves off. Probably not this year, but another problem that we could face the world is Russia could retaliate. If you don't buy my oil, I'm not going to give you my gas. And that could be problematic for the Eurozone economy. And that could tip the Eurozone into a recession. Now, I think we have a lot of crisis on hand, food and energy and the cost of living crisis around the world. And I think this is being felt not just in the advanced economy, not just in the poorer economies, but also in the rich advanced economies in the West and in Europe as well. Could we start with the slide? So So far this year, the global economy has been buffeted by, I would say, a series of unfortunate events. We've been having high inflation, the cost of living crisis, supply shortages, the war in Ukraine, the rising interest rate from the Fed and other central banks around the world, and also the lockdown, what do you call it, draconian lockdowns that we saw 2 years ago are still being implemented in China. I think just yesterday, Shanghai is just emerging from the 2-month lockdown, and that is giving a boost to the capital market. And also we've seen the collapses of cryptocurrencies, the likes of Luna. We call people who invest in them lunatics. But I mean, they invest in Luna, but we call them lunatics for some reason. And also, the bear market has begun in the U.S. In the tech sector. But now I think last week was a bounce back. Normally we call it a dead cat bounce. I mean, we have a series of falling stock markets and asset prices for about 8 weeks. And I think last week it was a respite, and we saw a sign of a comeback. And obviously people would like that to continue, but I'm not too sure that that will continue for a long time. But anyway, let's get back to the problems at hand. I think the supply shortages have become more pronounced as times go on. People have been talking that the chip shortages, should fade this year, but I think this is going to continue. I think a lot of our, electric appliances are becoming smarter. Sometimes get smarter than human. The kettles are being smart kettle, the TV are smart TVs. Everything else demands chips. I recently bought a car, and I was told by the dealer that I bought it from, and he said that lucky that I bought it 2 weeks ago, because later price would increase, but the functioning of the car would decrease. They cut off a lot of the functions because they don't have the chips, and the supply shortages are becoming real, especially in the auto sector. And also we see the freight rates around the world, shipping freight rates. People have been saying that it would come down this year, given that the situation around the COVID is easing, but we've not seen that. Prices have been creeping up, and they're likely to stay elevated towards the end of the year and perhaps well into next year. So the logistical supply side is not going to ease anytime soon. I think we are seeing that it's actually being exacerbated because of the problem in Europe. The problem in Europe now is because they will eventually have to import their gas in terms of LNG. Gas will have to become liquefied, and that will push up the demand for ships. I've spoken to people in Korea. They said that, Korea has been opening up for about a couple of months. So I asked them about the stock market. They said the stock market did not move so much, except the shipping sector, the shipbuilding sector, having a lot of demands because they want ships to transport their LNG. So this is, pushing up the freight rates even higher. So it's not coming down soon, anytime soon. And we've been talking to our clients who are exporting food, and especially durian, to China. The client said that she used to transport the durian by ship. She can't transport by ship anymore. And then by road, now the roads are blocked. Now she's trying to get all the air freight to get her durians to China. But she said even that is having a squeeze problem on the supply side. So all the channels are being blocked up. So the logistical problems are not easing anytime soon, as many people have expected. So a lot of problems lay ahead. And I think our two distinguished speakers have also mentioned the food crisis that are coming. We've heard the news that Indonesia banned their palm oil export. I think now they've reversed that decision. But I think last week, Malaysia stopped exporting chicken to Singapore. And I heard many complaints from my Singaporean friends. They have to eat frozen chicken for probably the very first time in their countries. But I think luckily, Thailand will be quite well immune to the food crisis. I think rice price have so far have been stable, but I think they will creep up. They will creep up towards the end of the year, as I think people will substitute wheat into rice. Next slide, please. That's not a picture of me, obviously. I think that's this analogy of the Fed. You know, the Fed is trying to walk across two buildings on a high wire. The Fed has been wobbling a bit. I mean, on the one hand, they had to try to contain inflation by raising interest rates. But on the other hand, they would like to engineer a soft landing of the US economy. And if they're too aggressive, they will tip the US economy into a recession. And we do not want that at this point in time. But at the same time, I think they realize that the cost of living crisis, the inflation problem, the overheating of the economy makes it very difficult. Remember this time last year, the Fed had been saying inflation was going to be transitory. It was going to be here for a short time, but you know, we're a year from that point, and inflation has been, you know, climbing higher to 40-year high, and you know, I think President Biden has been facing a lot of, you know, a lot of unpopular rating. You know, his rating has been coming down because of that problem, and because of the Fed has been wobbling. You know, at this time last year, the Fed said that we probably would not raise interest rate well into 2023, but now so far they have done 3 hikes. The rates have gone up by 75 basis points, and it's looking increasingly likely that they will probably take that rate up to about, let's say, 2.75 to 3% by the end of this year. And last night, a Fed member said that they could well take it much higher than that because of the inflation problem and the overheating of the economy. The job market is still quite strong. The vacancy rates are quite high. You know, a lot of vacancies are hard to be filled, and they're lacking staff. If you go to the US lately, you will see that a lot of restaurants are still closed because they're lacking staff to run it. And that is the problem that is probably the problem of, you know, that have been coming off the crisis, because the past 2 years, I think Americans have become net savers. Their saving rate have gone up because of their massively generous fiscal support to the people who become unemployed. So actually the Americans were better off. A lot of Americans were better off because of the COVID, because they were out of the job, and they got hand off from the US government, and they become richer. But anyway, the saving rates have been coming down from about 15% now down to about 6%, just above the pre-pandemic level. So I think now they are still, you know, waiting on the sideline, waiting on the fence, because they still have money in their bank account. But I think sooner or later, I think they still have to look for the real job, not just trading cryptocurrencies at home. Anyway, next slide, please. That's the Fed Fund futures, and that's what I said, that they're probably going to take it up to about 3% by the end of next year. And the terminal rate, or the final rate, it could be well into 4 to 5%. And that would take us back to, I think, early 2000s, where the Fed funds rate were that high. Next slide. Another thing that is quite a scary thing for a lot of investors like myself and people around the world watching is the Fed has been pumping liquidity into the capital markets for the past 2 years, taking the Fed balance sheet from about 4 trillion up to 9 trillion. And tomorrow they will begin their reversing of this, flooding the capital market with liquidity. They're draining the capital markets, the liquidity of the capital market, and they will start doing it beginning tomorrow. I think this month 47.5 billion will be coming off the capital market, and then eventually it will be 95 billion per month, and that is going to take the Fed balance sheet down to about 6 trillion in about 2 years' time, and that is quite a scary number. $3 trillion will be coming off the capital market, coming out of the capital market. Imagine for the past 2 years, if you look back for the past 14 years, the Fed has been pumping in liquidity into the capital markets, taking the balance sheet from less than 1 trillion to the peak of nearly 9 trillion. And now the Fed will be draining liquidity of the capital markets. The Fed had been, a major buyer of asset in the capital market. Now the Fed is going to be a major seller of the capital market. That is going to put pressures on the asset prices. So we expect rates to go higher, because of the Fed funds rate, as well as the Fed selling the treasury holdings that they've been accumulated over the past couple of years. Next slide. And another thing is the cost of funding, the interest rate will probably be going a lot higher. For the past 40 years, since 1981, the Fed funds rate had been coming down from, I think, 16% down to about 1.2%. And for the past couple of months, we've seen a huge sell-off in the capital market. And it's because the 10-year US government bond rate had been climbing from 1.2 to about 3%. And people were fearful that it could go to 5 to 6%. That's why we saw a huge selling off. But the past week or so, the 10-year rate had come down from about 3% down to about 2.7, 2.8%. And that gave the market some respite, a sign of relief around the world. Okay, but it could be the end of the bull market because now the Fed will be hiking interest rate, the Fed will be selling treasury holdings, and that could, be really a harbinger of things to come. That it could get a lot worse before the Fed, stop selling. Next slide, please. I'm sorry, we have a German guest here, but we do have to mention the war. I think it was the inactivity of the German that had the European Union members quite agitated that since the end of the Second World War, the German had been, trying to stay away from, accumulating, war equipment and missiles and all those weapons. But now I think since the Ukraine war, I think the perspective has changed, especially in the European Union. And it's probably bad for me to say I advise clients to buy weaponry stocks like Lockheed Martin. It's not so clean cut, but because I think it's the change of attitude that European Union members are now spending up to 2% of their GDP on equipment, war equipment, on defense spending. So this is going to be I think it's a huge turning point, and I think people have been, have changed the perspective of that. We thought that physical war was a thing of the past, but now it is actually nearer to us than we thought. So that's another thing that could be problematic. And I think we mentioned about the energy market, the energy crisis. Next slide, please. And also, I think globalization had probably peaked. I think Trump started it, kicked off the whole thing, with the war, with the trade war with China. I think now Putin just probably nailed the coffin. I think the globalization has peaked. I think now Europe is probably trying not to trade with Russia anymore. I heard that McDonald's had left, Starbucks had left Russia, and I think now KFC chicken has changed into KGB chicken. I'm not sure whether that's true or not, but I saw a picture.
I think that was a joke.
It's got a picture of Lenin on it, but well, who knows? Colonel Lenin could be frying chicken soon. Next slide, please. And I think we talk about China. China just Shanghai just emerged from the lockdown. I think Beijing is still under lockdown. But the thing is, I think probably the worst is probably behind us for China, because the Communist Party would like to target the GDP to be 5.5%. I think they might be a bit less optimistic. I think they had recently revised it down to 4.5%. But still, we think that massive stimulus program will be on the way in China. I think they will cut interest rate. Contrary to the US, I think China will be giving a lot of support, giving a lot of underpinning the activity for the global economy in the second half of the year. So I think we expect the global economy will probably do better in the second half. I think we are more optimistic. It's probably the law of averages. In the first 6 months of the year, we've been hit by a series of bad news. I think we should probably see some good news towards the end of the year anyway. So I think on that side, it's probably getting better on the economy. Next slide. I think we've been seeing a lot of clients for the past couple of months, and I think their emotion could be characterized by 2 Beatles songs. I think for the past few months, I think it's been help. Anybody help? Anybody could help us. Anything that could be good news. But so far, not yet. But I think, for the last week, I think some people might say it could be here comes the sun. The sunshine could be coming. I think they are being extreme between fear and greed. And I think now we could still be in a turbulent water for a while. But having said that, I think, next slide, please. I think next slide is just showing that we are not going back to 2020. I think the world is not going to a recession, despite all the myriad problems that I've mentioned. But I think this year, global growth will be slowing, but it's not going to go into recession. Although people might have forgotten this already, but Asian Pacific countries have not really opened yet. Japan is opening up tomorrow. A lot of countries are opening up. So I think that will be a tailwind to the global economy, especially this part of the country. So I think we're not so worried about stock market in Thailand. I think Thailand, because mainly because we're not really, we don't have a lot of tech companies. I think if you look at the structure of the Thai economy, we are dominated by energy and banks. And I think this year, energy and banks will do really well. So we're not worried about the Thai equity market. Anyway, I leave other recommendations to later, but I think I'll stop there.
Okay. Kumburan, were you saying that those songs were for the world or for Thailand?
Well, I think for the world. I think, around the world, people have been crying for help for the past 4 or 5 months. Everywhere, yeah. But I think, last week people think, it could be the sun shining. Right. It could be here comes the sun, but not sure. It might be too early, early day to call that. Oh. Yeah.
Maybe you could sing it for us for an encore. Oh. We'll think about that.
Well, if stock market goes up for 2 more months, then I'll come back and sing.
Thank you very much. Actually, just to follow up before we turn to some questions, and I would remind viewers you can, we'll take questions from the floor as well as on Facebook. But just to follow up on a couple of things you said after drawing the very big picture trends over in America and the Fed and actually the worldwide trend amongst some key central banks to concerted raising. We're in a raising cycle combined with the massive sell-offs and draining of liquidity. But how could you bring that home to Thailand? As Dr. Kirita said, I think there's big expectation this year that the BOT, the Bank of Thailand, won't follow that. And in fact, often though in Southeast Asia, central banks do follow the big and important trends amongst the big and important central banks. So why is that, and where does that leave Thailand? Does it leave us a little bit out of step here with the trend internationally, especially in this whatever you call it, draining of the liquidity market?
QT,
markets.
Yes.
QT.
Yes. Is that a question for me? Oh.
Yeah,
okay.
And I'm sure, Kirita, you're nodding as well.
I can elaborate why I think the interest rates will not be raised this year, especially in Thailand by the Bank of Thailand or by the Monetary Policy Committee. Well, that's because again, raising policy rates or interest rates in Thailand will not help to reduce inflation by much, because inflation in Thailand or the high prices are mostly imported, right? They're from higher oil prices, they're from higher fertilizer prices, they're from raw material prices that we import. So raising interest rates in Thailand to curb demand would not help much because the demand in Thailand hasn't really, boomed or overheated like in the U.S. But on the other hand, raising interest rates would hurt small and medium enterprises. It would hurt households with debt, right? It would hurt the recovery of the Thai economy, as a whole. So, balancing all that, and of course, Gwen had a good question saying that, well, but that won't, capital flow out of Thailand because our interest rate is lower than. I actually did discuss this with the Bank of Thailand, and of course, looking at the data, we actually do not have a lot of international capital in short term. Mainly, if you look at the stock market or if you look at the bond market, or even all these short-term flows that come into Thailand, there's not much, right? We don't have a lot of debt. Short-term debt in international currencies or in US dollars as well. So, there might be some outflows, but again, balancing everything else, it's probably wiser not to raise interest rates in Thailand this year in order to support the recovery of the Thai demand, of the domestic demand. So most likely next year when the Thai, economy recovers with more, when demand recovers more solidly, then the Bank of Thailand will think whether it should raise interest rates or not.
Interesting. Varun.
Okay, yeah, I agree with a lot of what Dr. Gureda had said just now. But I would just like to add, I think probably the BOT would not admit to this, but I think they welcome a weaker exchange rate. So I think a weaker exchange rate is definitely helping the Thai economy, and I think they will not admit to it or they will not make a statement on it, but I think the lower the exchange rate, it's going to be a big boost to the Thai economy, especially we are still relying on exports and tourism. Another thing is, I think we're still heavily scarred by the pandemic. I think if you go down to the south, I think you might see some activity returning, but a lot of scars, but a lot of, when I say scar, economic scars, obviously not facial scar, but a lot of scars on, in the tourist towns where, all the pubs and bars are closed permanently and people are heavily indebted. I think another ticking time bomb of the Thai economy is the household debt. Household debt of in Thailand is about 90% of GDP, which is quite high, especially that, this is mainly borne by the poorer people, the poorer segment of the society, and they are heavily indebted in the categories of credit cards and personal finance, which you could say that the interests are a lot higher than mortgage rates and other loan rates. And the household debt that we observe is just the tip of the iceberg. There's a lot of I think we discussed this on previous occasion, that a lot of household debt that are not officially recorded on the unofficial sector, that is scary. It could be a lot larger than what we saw, 90% of GDP. So Thai households, especially the poor, are really in trouble. And so that's why I don't think we can raise interest rate this year and probably next year and probably a few years beyond.
Right.
Yeah, that's my take.
Yeah, thanks so much for bringing that up. You actually took away two of my next questions,
Okay,
but
sorry.
anyway, I'm sure people from the floor will have some interesting ones. Actually, I did want to actually look at the most vulnerable and where they are in all this, and some of the economic trends we've discussed. But first, maybe to turn to the World Bank view, Birgit, of the... Don't look at me like that. I'm sorry. It's not
take
too
some
hard.
questions, but
No,
if
it
you
was
put
really
me on the
about this
spot.
whole view of the, where we're at on all these big picture trends and interest rate cycle and
I think in terms of inflation pressures, right?
can you
It's
just speak closer?
sorry. Thank you, Ben. I was looking forward for questions, but I'm happy to just chip in on the inflation question. Look, there are many factors impacting interest rate setting at this point. It's not just global inflation, how it hits the country. It is the fiscal tightening, the financial tightening in markets. But I think what we didn't quite discuss and what I try to hint a bit on is you will have the forbearance measures running out. which means banks will have to face the non-performing loans coming through. So we don't have that number. And I'm sure as a banker, you will be very worried about what you see in the books once the forbearance measures are running out. And if we think that non-performing loans increase by the end of the year, perhaps to 7-10%, then you will have a different challenge for monetary policy as well, and for banks, because by definition, if your non-performing loan portfolio increases, you have to increase provisioning as a bank, which means you cannot lend and provide credit. So there is another push, on interest rates coming from that side, which I think is perhaps much more complex to deal with for the central bank and the financial sector at large. So and that plays into the question on also how, including household debt, right? That's part of that picture. But I don't think it's just household debt that will increase in terms of a portfolio that is non-performing for many of the banks. So let me just stop there. Thank you.
Right, thank you. I'd really like to come back to this issue of household debt and the most vulnerable. I know also you've done some excellent research at TDRI as well, Kirida, but we'll turn to the floor and take a question from our member over there, Brian.
Hi, Brian Mertens, freelance writer for Forbes Asia and other publications. One of the perennial weak points of the Thai economy in previous years has been weak domestic investment, domestic private investment. And I'm wondering, leaving the sort of last 2 years aside, what are the prospects for improvement or continued weakness in the future? How does that go? Maybe I'll address this question, especially to starting with Dr. Kirida.
On the issue of private investment, I mean, as you mentioned, in the past 2 years, we've seen a very, slow growth in that. But interestingly, when we look at the private investment index, it has actually started to pick up since February of last year. And this is by both Thais and international investors. And of course, from international investors, many of them have relocated from China to Thailand. So they're all, U.S. companies, Japanese companies, Taiwanese companies, and Chinese companies as well. And by relocation, I don't mean that they shut down their companies in China and move to Thailand. It just means that they, take part of their production, and instead of producing everything in China and exporting from China, right, they move that part of production to Thailand, to Vietnam, and maybe to Indonesia as well. So if you actually look at the relocation from China that we did a study on, Vietnam has taken the bulk of that, of that move from China, while Thailand is number 2 in the region. And the difference between Thailand and Vietnam is that Vietnam has taken a whole spectrum, right, from footwear, to tablets, production, while Thailand's relocation to Thailand is mostly in the semi-high-tech to high-tech sectors, so like electronics, automobile and auto parts, petrochemicals, and of course, there's a lot of construction companies from China. There's also a lot of companies from Taiwan that are more focused on low-carbon technologies that have come here. So, because we are, really promoting our BCG, right, our bio, circular, and green, and we have, BOI privileges and promotions here for that. So, that's also another, sector that has, moved to Thailand as well. So, we're seeing a lot. We see Foxconn, coming here, right? So there's.
But the domestic private investment.
In terms of the Thai investors investing in Thailand, we've also seen a pickup in that, because remember, foreign direct investments is only around 25% of our total private investment. So the pickup in the private investment overall, of course, comes from the Thai domestic private sector as well. So we have seen an expansion. I can just give you an example. During the COVID pandemic, actually, there actually industries that have performed really well, right? If you look, if people compare it to the K-shape, recovery, some are on the upper leg of the K, right? While some are on the lower leg of the K. So during the COVID pandemic, there are many on the upper leg, such as what? Such as packaging, right? I mean, boxes, sell like crazy, right? So, or the cloud computing, right, really picked up at that point. So, of course, cloud computing is mainly invested by foreigners. Amazon Web Services here, Huawei has built their cloud computing here. But in terms of, for example, I know a big company in the stock market, Eastern Polymer Group, that produces plastic containers for food. And they have expanded, their production capacity quite a bit. So, there are industries which have done well even during the COVID pandemic, and they have been expanding as well. So now as the pandemic fades, I'm sure there will be more and more pick up in the because if you look at the capacity utilization, Brian, in different industries, it has gone up to almost its pre-COVID levels already. So that means that they will need a more capacity to produce in the future.
Thanks. And I think, Khun Burin, since you're moved further over to the dark side and as in your very senior position with the Kascon private banking group, I presume you're dealing with a lot of these, we're talking about domestic private investors.
Yes.
So does that kind of fit with your perception of where their priorities are and investment flows and interest in?
Well, I mean, when investment, when we deal on the private side, we deal with the high net worth individuals. So mainly they're in equity market, in funds and all that stuff. But yeah, but I'm not sure. I'm not too sure I'm too as optimistic as Khun Kirada in terms of Thailand's future over the longer term. I think we've seen, example here and there. But I think over the longer term, I think hard infrastructure we can do, but the soft infrastructure that we are worried about, I think we should take example from Singapore. How could we be competitive and how could we attract long term capital for the long term? I think now either both demand side and supply side for Thailand are quite weak. I mean we can't supply skillful human workforce. Our legal system, our institutions are not ready for the new world, the new, the I don't know what you call it, the post-pandemic world that the industries are quite new, and I'm not really sure that our legal systems are there to be flexible enough for the new type of industries that are emerging.
Right, that's a very
nowadays.
good point. But even some years ago, I don't think Thailand was trailing number 2 to Vietnam in attracting relocated investment from China. That would seem to be actually quite a positive change. But maybe I'm wrong. I don't know.
No, I mean, looking at the data on the relocation of companies in China, from China, of course, Vietnam is the number 1 that's far away from number 2, which is us. But as I mentioned, because we, as Khun Burin says, we cannot produce a wide spectrum as Vietnam can produce, and because of also our human capital but of course there are some sectors that I mentioned. For example, those that are in the low carbon industry, electrical vehicles, right, batteries. So those are the industries that Thailand is now trying to attract into Thailand, and we're getting some traction on that at the moment. So it's probably not in all industries, but in these very selected industries that are new trend and we're trying to promote.
Thank you. And Birgit, do you have any thoughts on that? No? Okay. Sir, please. And then we've got a couple from online viewers.
All right, thank you. My name is Robert Fox. I'm very interested to look at the skills in the economy. So if we think that there's a GDP growth of 3% this year and consider that we're coming out of a pandemic, I think the expression is moving into an endemic, perhaps, but there are industries which are gutted of organizational learning and really suffering from being underskilled and finding it hard to even populate frontline staff. And hospitality would be one. Thailand has enjoyed a terrific reputation for many years as a leader in hospitality. But you now hear people talk about even five-star hotels talking about a permanent downgrade in the service level. And that translates into metrics in the way hotels are run, etc. Is there something we're missing in terms of a government program to reskill our economy? Is there something in vocational training that needs to be peppered up, leaving aside longer-term educational reform? Interested in your thoughts. Thank you.
Are you referring to the Thai economy?
I'm
in
referring to the
particular?
Thai economy
Yeah.
as an example, but it's not unique. Yeah.
No, very good question. Birgit, would you have a...
You want to take the question?
Shall we collect a few questions, maybe? Do you know? Well, I think perhaps there are several issues you're touching on. I think one is perhaps skills, but I do think most of the hospitality sector is not in the high skill bracket, right? So these are lower skill jobs usually, and that's more a question of is there a resumption of some of the migration that happened before the pandemic, and a lot of workers in the hospitality sector were non-Thai, right? And it's still hard for them to return and get all the permits and whatnot. So I think that is probably more a transitory issue, I would say, in the low skill areas of the service sector. But if you think about more medium, longer term, what kind of growth sectors you want to have in Thailand on the higher skill side, yes, I think there is a shortage. And even there, the labor market changes that are coming with the rapid aging is going to impact Thailand. So in essence, you have to give all new entrants to the labor market an even higher skill level to compensate for fewer people entering the labor market. And that is going to be a challenge to continue, I think, especially in the sectors that are related to high technology, innovative, where you need a lot of innovation capacity. Yeah. Thanks.
Either you.
Yeah, this is my own thought. Obviously, I'm not running the government, but if I were, this would be probably my policy longer term. I would try to move people out of agriculture, especially rice farming. I think I would. I don't know if you know this statistics. 30% of the workforce in Thailand are in agriculture, and they only contribute to about 6 to 8% of GDP, so not very high. So we'd like to move people out of. Well, I would like, but I don't know. The government policy seems to be subsidizing agriculture that has not been productive or not very sustainable. But if we could move people out of agriculture, and let's say if we, I don't know, grow some type of Amazon forest instead of growing rice. Rice fields are paddy rice fields are not shouldn't be in Thailand, and well, not in the same extent as we used to. It used to be the main driving force of the economy, but it should not be the major driving force anymore. I think in the future, carbon trading will become prevalent, and I think a lot of countries will want to buy carbon credit from Thailand. And I think turning rice paddy fields into Amazon forest, tropical forest, I think that's a good way of letting the farmer enjoy the fruits of their land without hard work, and we could move these people into service sectors, which provide a better stream of income, a better guarantee of good quality of life. I think that's what I think, and I think people say that Thai people are generally lazy because we are rice farmers, and rice farmers they only work a few times a year. I don't know whether that's true, but they work like hard for 1 month and they take a rest for the next 6 months or so, and they do it again twice a year, and in between they don't do anything, and that's probably perpetuated like nice and kind-hearted Thai people. But we got to change with the world. The rice has been our mainstay for the past 800 years or so. But if I could change, if you read the headlines in the press, especially you guys are in the press, so they always have a big headlines that we lost our competitiveness because we export fewer rice than Vietnam, less rice than India. It shouldn't be something that we should be ashamed of.
Right.
It's something we should be proud of. We are moving away from rice into, I don't know, semiconductor or
Yeah.
whatever. Yeah.
And
Anyway,
that-
that's my take.
Yeah, I'd say at the same time, it's a long time since we've seen idyllic pictures of happy rice farmers in Thailand. They all look pretty miserable to me when you go and see them, and life's pretty hard, and they're pledging their crop way in advance, so
Yeah.
they're again in
if
this.
I can share something on the rice farmers that TDI had done research on, the average age of rice farmers in Thailand is 51 years old. So don't worry, Kun Burin, sooner or later they
got a
won't be able to do much. But I agree with Kun Burin that we probably need to reduce the number of farmers and the people in the agricultural sector while maintaining food security. But of course, food that has more productivity in their production, and also of course more value added in the crops that we produce, and of course focusing on processing them, adding value to them, making them bioproducts. I think that's the way to go. So we don't need as many people in the agricultural sector, but we still need some of those raw materials to do higher end products. And just to, I know Kun Bob for a long time, and Kun Bob is actually in the telecom sector. So we have been discussing a lot. I think one of the things that I have always mentioned to Kun Bob is that we probably need to open up more, right, to professionals. Not only move people out of agro sector, but be more open and welcoming to professionals rather than to low-skilled labor coming to
Right.
Thailand.
So can I pick up on that on the agricultural sector? Because wouldn't one of the solutions be to mechanise it? There are BOI promotions on smart farming, etc., but they're very limited. And last I checked, there was no take-up on BOI promotions on smart farming.
Just for people listening online, I need to repeat that because you weren't in the microphone. That point, the follow-up was, wouldn't one of the solutions be to put more effort into mechanising the farming sector? I'd actually like to build on all of what you've just said, Kirita and Burin, about generally the push in Thailand to take the whole labour force upscale and more technology, more jobs in move people generally up the value chain, etc. But actually, you also just talked about the looming food crisis, and every day there's new announcements about food-producing countries putting blocks on bars on exports. So the Malaysian chicken thing is just one example, and Singapore's palm oil, but it's happening. India, India's going to create huge panic, I think, with lockdowns on some of its exports. Ukraine, as we know. So food is becoming, this could be just the moment where actually Thailand's sluggish economic model of, too much agriculture base. Are we missing something here? Would there be some, should we keep pushing Thailand to rush out and go for tech jobs when actually food production might be the absolute gold of the future? Is that a possibility? Birgit, you're looking very sceptical.
I think it is a possibility, but only if you increase productivity in agriculture. And that means, by definition, you produce more with less inputs, and especially less labor input. And I think, now that I know your name, Bob, I might use it. The upskilling, the question you ask, it is a really difficult business. And I cannot give you from the World Bank Group really cost-effective evidence that it worked in any country on a large scale.
What, mechanization?
It is an upscaling of the labor force. It is something that is really difficult to do later in life with labor force. So the best chance you have, give the labor, that's why I focused in my answer before on the labor entrance cohorts. The best chance you can give is give them the best and latest knowledge and flexibility in their skills, and they can be successful. It is extremely difficult to reskill labor force, and I would say probably especially farmers in later life. So the evidence is very scant that this is very easily done, and in a way that makes also economic sense. But the issue you also touch upon is how do I get mechanized farming, for instance, going? It's a question again of what is the land, right? And there's a big issue in Thailand. A lot of the land plots are very small. They're just not for mechanized, larger level production, and that's a structural issue. How do you resolve land titling, land management issues? And yes, it is true. It could be something that increases productivity,
Right.
but again, it will not absorb more people, more laborers, right?
Thank you.
Can I just add, just to
Yes.
clarify what you said? You seem to be have a conflict between rice prices will probably be going up and all that. But I think it's just that I agree with Birgit here that we should not get rid of our cultural sector, but we should move a lot of the labor force away from agriculture because they're not productive. But we should keep agriculture. Smart farming, I agree. High yielding crops, I agree. But we just have to move away from, because I think, I don't know if you guys know, but because the land plots are getting smaller and smaller, because, Thai farmer 100 years ago had 10 kids, and then he shared the land, and then the kids had 10 more kids. So it's just becoming untenable to have these small land plots. So they should move away from agriculture. But, agriculture sector itself is good.
Right.
I think in Thailand, yeah. Just-
So I think
just to add, yeah.
I think you're basically saying it needs massive reform in
Yes.
agriculture. That's another whole subject for
But
another
I don't
evening,
think that we're going to get reform. You know
Right.
why? Because of the
Why is
votes.
that?
The votes. It's politics. They keep subsidizing because of a lot of people are in there,
Right.
in the sector, but they can easily support the agricultural sector, even though it's not productive. But
Right.
it keeps getting, votes. And
I think that's also another whole
Yeah, sorry.
topic for
Anyway.
another whole evening. We'll close off very soon. We've got one question online, and also I'd just like to return to, we haven't dwelt too much on, I mean, a year and a half ago, I think it was all about the impact on the most vulnerable in the COVID lockdowns, and massive amount of focus going in on Thai government support, which went out. And I think the World Bank was highly praised Thailand for what it did in that period to support. Right now, the kind of picture you've all painted is not very positive for the rock bottom sector. It's not the great sense of crisis it was maybe 18 months ago. But what's your perspective on that? Maybe if each of you have a take. I mean, I know TDRI, you've done quite a bit of work on that. Is it?
So your question is, are the most vulnerable worse off now than compared to the COVID period?
and with the outlook now that we've just been talking about.
Right. No, I think the outlook is more positive than during the COVID period. The reason is because during the COVID period, most of the low-income household members could not even go out to work, right? So they have lost a lot of their incomes at that point, while the government, of course, did give them direct transfers through the social welfare cards, which are the cards for the poor. So that was one of the assistance that they received. Today, as the economy opens up, they can work more, right? And you can actually see, the employment numbers have gone up, Social Security, take up has increased. But the social welfare card is still there. They're still giving the same amount of money to low-income households. So that plus the additional incomes that low-income households can make now. Although, of course, now it's not COVID, it's higher inflation, especially on food, that is affecting them quite a bit. So again, the social welfare card does actually help, and that's something that I think was what the World Bank, correct me if I'm wrong, Birgit, that the World Bank said is one of the targeted assistance that that Thailand
It's a good thing. It's done
right,
well.
right,
Yeah.
that Thailand should get some credit
Right.
on. Mhm.
Yeah, I think Kun Kirita is right. Maybe at the moment it's not the COVID shock anymore that is the most hitting the poorest. But as she said, for poor households, high food inflation is a different question, because not maybe even half even half of the basket of products they're buying are food items, and if
Right.
they're all
I think you
increase
said
in
40%
prices,
range.
it's about 40-50% for poorer households. So and so food inflation is hitting them hard. So continuing to support them at this point, but for a different reason, so to say, is the right thing to do, because it is very much impacting them. It's a different shock, but it's a shock where you have the tool in the hand of targeted support that is making the difference for these households and continues them to take part in consumption.
So are you
in the
saying it's
economy.
correct for the government to continue
At this point,
putting
yes.
extra funds into
Targeted support,
right,
yes.
which is part of the rationale of why Thailand went into raising debt levels and spending. I mean, it's quite a considerable cost, right? So are you estimating they should keep it up for the rest of this year?
Well, I cannot predict all the inflation trends but globally, but it looks like commodity prices, including food prices, will stay up for a while. So yes, so as long as you have vulnerable groups in your population impacted by these shocks, it is very reasonable to support them and continue to keep the impact limited. And think at the same time, what are other measures that could be phased out or redirected to get the economy back on track? Right,
thank you. And Brun, I've got a question specifically for you from Peter Jansen online. He asks, you mentioned that bank and energy companies are, particularly shining on the SET, on the Thai stock market. Is this mainly because they're moving out of Thailand?
I don't think so. But I mean, some of the Thai companies are doing well, the energy companies, because of the higher prices, across the world. And also, I think banks, we're not facing the same crisis. The worst crisis that we saw was probably back in '97, and we are nowhere near that. Even though we might see some NPL, climbing up a bit, but we're not. I don't think banks are in danger of being wiped out as in 1997. So we're not too worried. So I think bank stocks are still undervalued, and I think Thai economy is opening up to the hospitality sector, the tourism sector. So I think that's why we're going to get some support in the equity market.
Right. Interesting. So you're still upbeat on banks. It did seem like the continuing rollover of debt and the debt moratoriums and the classifications of non-performing loans, if they could sort of converge in a perfect storm, as some people fear.
Well, I'm normally pessimistic, but I'm not too pessimistic as
I can see.
the headline. Well, I mean, I'm not pessimistic on banks because I think they will remain profitable, and then I think the worst is way behind us. So I think it's probably okay now for the banks to recover.
So to close, I would just like to ask each of you: it seems like there's a reasonably, I would say, not pessimistic views that you've all got of where we're at now. Is it better or worse than you would have expected where we're at now? And how important are the next steps in terms of the determining the budget and spending priorities? And I guess we must say the political situation as well. Could that affect things? Kirina? Yeah.
Just wanted to say something before we close, right?
Yes.
Well, I agree with you that I think we are more optimistic now, and I think the second half of the year will actually be better than the first half of this year, given that if oil prices soften a bit more, if COVID fades more than today, and of course if next year China opens up for international travel, that would probably benefit China even more. But with all that said, the risks are pretty high, and there are lots of downside risk. We don't know what's going to happen in the geopolitics space, right? Especially the Ukraine-Russia war. If that escalates and commodity prices rise more than we expect in the second half of the year, or if COVID or other pandemic comes about, we don't know. So again, I would say the major risk that I see for Thai growth, actually the next 12 months, would be the situation, in the geopolitics space, of course, which affects inflation, and any, knock on wood, future outbreaks of COVID strains or other viruses. I think those are the two major concerns and risk.
Right. Thank you. Birgit, would you like to come?
Yeah, as we perhaps started with, the real risks are all on the global side, right? If we call them geopolitical or other global risks. And I think for all countries, that's going to be the challenge, because they're not all coming just from one direction. We have the Ukraine-Russia conflict. We have the structural slowdown in China, which will stay for a while. And we do have still high inflation and financial tightening in the US. So I do think it's actually quite a bit of headwinds for all economies. We're all recovering, but we continue to have these three headwinds to stay with us. But I think what everybody, surely also on the economic policy side, is perhaps breathing a bit freer, because the emergency mode of operating is slowly dissipating perhaps, and it becomes even more a question again to what are really my medium-term development goals, growth sectors I want to see. And you see this discussion also in Thailand again, exactly focusing on that, which I think is a good sign, and a sign for optimism that things are slowly getting out of the emergency mode back into thinking more medium term. Thank you.
Thank you so much. Brun.
Okay. I am both optimistic and pessimistic at the same time. I'm optimistic in the near future. I think the crisis is ending soon. The COVID crisis is ending soon, much earlier than a lot of people thought. I think when we were here 2 years ago, we thought it could last 3 to 4 years, because the arrival of the vaccines have changed all that. So I think the crisis is probably ending soon. So I'm quite optimistic in the near term, but I'm much more pessimistic about Thailand's future in the longer term. The widening inequality, the structural problem, the aging populations, the household problem. So if I were young, I would probably be somewhere else, not in Thailand, because I think the future is probably brighter somewhere else. If I were to start my career, I'd probably start somewhere else. Right. Because I'm not really sure where the new industries will be, in Thailand. It's not taking place.
Would it be in Asia, Europe, or America?
Probably not America.
It's
they
not
keep shooting people down.
I'm not sure that there's a lot of places looking too good at the moment. I mean,
no, I think Europe is quite good. I think they're going clean anyway. Clean energy, net zero. I think it's going to be quite exciting.
You mentioned the possibility of a Eurozone meltdown, but anyway, well, let's see. We can have a panel about it in 6 months' time. I'd just like to thank everybody for sticking with us, and our excellent speakers. I thought that was you really covered such a great range, and to everyone still viewing online. Please look at our website and Facebook for events coming up, and please support the Foreign Correspondents Club. Thanks very much, and thanks to our technical team over there, Kuntam, and staff. See you again. Bye. Thanks very much.